Despite being in the so-called worst economy since the Great Depression, the stock market is booming. But some analysts don't really believe in the stock market rally. They believe that the stock market is 77% overvalued. What's up everybody, I am Jasprit Singh from theminorityMindset.com and welcome to the Minority Mindset. Online stock brokerages and commission-free stock brokerages have made stock market investing accessible for anybody with a cell phone and $10. This is good news for you because that means you can invest in big companies on your fingertips without paying a whole bunch of money in commissions. It's good news for your investments because easy access to investing brings more money into the stock market. And it's great news for investors because fintech is developing into one of the most popular startup industries out there. But naturally, it comes with its own fair share of problems because with easy access to investing comes a whole bunch of investors who might not know what they're doing. Some economists believe that this easy access to the stock market is bad because it's setting up regular people, known as retail investors, up for a massive crash that the pros will be able to handle, but regular people won't. We are in the middle of a recession with millions of Americans out of a job, yet our stock market keeps breaking record highs. Part of the reason for this is the Federal Reserve Bank keeps bailing out the stock market by injecting trillions of dollars into the market to keep the stock market inflated, but I'll talk about this a little bit later in the video. A second reason for the stock market boom is that we have a lot of retail traders, so regular people coming into the markets and pouring money into the stock market without always knowing why. Now look, I am a big supporter of regular people investing their money themselves. I love that. I just want investors to do their own due diligence. I'll show you what I mean with a few examples. When this pandemic first hit, Zoom became very popular because everybody wanted to video chat each other instead of seeing each other physically. And so naturally, investors wanted to invest in the Zoom stock. So lots of retail traders, regular people, went onto the stock market and they started buying shares of ZOOM, thinking that they were buying the Zoom video company. But ZOOM is actually a penny stock, and it is completely unrelated to the Zoom video company. So then this penny stock started to rally, and then the SEC got suspicious because of what was going on, so they halted shares of ZOOM, and lots of investors ended up losing money, and it created this whole big thing because people didn't really know what they were doing because they didn't do their research. Here's another one for you. When a company goes bankrupt, its stock typically becomes worthless. But when the Hertz company went bankrupt, retail traders, so regular people, started playing hot potato and they started buying up the Hertz stock, and the Hertz stock rallied more than 200% as a bankrupt company. It was so crazy that Hertz actually tried to sell $500 million of their own worthless bankrupt stock to raise cash. But thankfully that was reversed when people and the SEC realized that the Hertz company was trying to make an easy $500 million by selling nothing, a worthless stock, to speculators on the stock market playing hot potato. And I should also mention that we have some stocks, like everybody's favorite, Tesla, selling for more than 1,200 times earnings. What that means is if you started a company and you made $100,000 in profit and you were selling for 1,200 times earnings, that means you could sell your company that made $100,000 for $120 million. It's crazy. I mean, could you imagine hitting that thumbs up button below 1,200 times? The valuation is so high that even Tesla is trying to take advantage of it because they're selling $5 billion worth of their own stock to the market because they're like, why wouldn't we cash in on this huge valuation? At this point, you might be thinking, oh my God, the stock market's gonna crash. But it's not so simple in a market like we're seeing today that is so heavily influenced by the government and the Fed. Almost everybody thinks that the stock market is overvalued. I mean, most CFOs in America think so, and if you compare the price of stocks with our GDP, this is the most overvalued stock market in history. Warren Buffett is a value investor. He loves finding companies that are undervalued and cheap, then he buys them up, and then he waits for the company's value to rise. And because of his famous value investing, there's an indicator named after Warren Buffett known as the Buffett indicator. This Buffett indicator is used to analyze the overall stock market value because it compares our GDP with the market capitalizations of stocks. That means the Buffett indicator looks at how fast our economy is growing and how big our economy is. This is our GDP, and it compares it to how expensive stocks on the stock market are. This is the market capitalization of stocks. And not surprisingly, this Buffett indicator is saying that the stock stock market is trading at an all-time high valuation. In the second quarter of 2020, our GDP, our economy crashed by 32% on an annualized basis, and during that same time when our economy crashed, our stock market boomed. So here's our economy and here's our stock market. Okay, when the pandemic and this recession hit, both of these two things, the economy and the stock market, crashed. But then the stock market went up like this and our economy just kind of went like this. Now, the big question is, does this overvaluation mean that the stock market is going to collapse? You might think, oh, the stock market is so overvalued, so it's about to crash. And that's possible, but it's not so simple. The reason the stock market is valued so high is because, well, there's so much free money floating around out there. This is not something that just started in 2020. Stocks have been overvalued for a while now because for the last decade, interest rates have been historically very low, so investment firms and institutions were able to borrow money very cheap. Wanna guess where all this cheap money ended up? The stock market. I mean, if you can go out and you can borrow money for 3% and then you're gonna go and invest it in the stock market where your money's been growing like 7 to 10% a year, you're gonna make a huge spread. Now imagine you're gonna do this not with $1 or $2, but with $20 million, $30 million, or $300 million. Now in 2020, interest rates are lower than they ever were before, so if people wanted to or institutions wanted to, they could borrow money for essentially free and just dump it into the stock market. Plus, when the government sent out a whole bunch of free money in the form of stimulus checks, want to know where a lot of these stimulus checks ended up? In the stock market. I'm so proud. And if the money didn't go into the stock market to buy shares of these companies, then it was spent at Amazon or Walmart or Kroger, which all of these companies trade on the stock market. And if that wasn't enough, you have the central banking system of the United States, the Federal Reserve Bank, the Fed, promising to provide essentially an unlimited amount of support to keep the stock market inflated. You have to understand that even if the Fed wasn't dumping all this free money into the stock market, we'd still have very high valuations of stocks because, well, we have a whole bunch of money going into the stock market through cheap debt, and we have a whole lot of free money going into the stock market. Now on top of that, you have the Fed literally pouring trillions of dollars of cash into the markets to keep things up. So we're not in a normal market. So is the stock market gonna crash? Of course! That's how the stock market and the economy works. We go through booms and busts. We just don't know when it's gonna happen. So if you're sitting there waiting to invest because you wanna wait until the crash, you don't know how long you might be waiting. You might wait for a week, a month, a year, 10 years, who knows? And during that time, you could also miss out on huge upside. That means you want to make sure that when you are investing, that you're investing smartly. Now, before I get into what you should be doing in this market, if you are interested in investing in stocks, you have to use a stock brokerage like our sponsor, Webull. Webull is super simple to use. All you have to do is create a free account, fund it, and then you can buy or sell whatever stocks or ETFs you want right off of your phone or computer. You can do your research right off of their app, and the best part of all is that at the time when we're recording this video, Webull is giving you, Minority Mindset fans, a free stock valued between $800 and $1,600 when you deposit $100 into your account. So if you want to learn more and see how you can get your free stock, I got the link to where you can do that in the description below. Minority Mindset is a partner with Webull, so if you use them, we will get compensated, but there's no additional cost to you. It's free to create an account, they don't charge you a penny to make a trade, and they're giving you a free stock valued at up to $1,600 when you deposit $100 in your account. So if you want to learn more, get started and get your free stock, I got the link to how you can do that in the description below. When you have all this freshly printed money floating around, and you have stimulus plans injecting trillions of dollars into the economy with another stimulus plan probably on the way, and you have cheap debt making it very easy and cheap for people to go out and borrow money and invest it, you're naturally going to have very high valuations. Remember, the price of a stock is determined by supply and demand. When you have a lot of buyers out there like we have right now with all this cheap and free money, that's going to push the price of stocks up because you have a lot of demand and not as much supply. The tricky part of this question is how much higher can we go? Stock prices at the end of the day have to be related to how much money the underlying stock or company is making. Well, when you have a whole bunch of free money floating around and a lot of this money is coming into the stock market, then you might see higher valuations in the stock market, and this might become your new normal, at least temporarily. Right now, our economy is recovering from rock bottom because in early 2020, the economy was completely shut down, and now we're starting to recover from there. But there are things that could potentially trigger a sell-off, Like if the free money went away, so people don't have money to either spend at businesses, or people don't have money to invest in stocks, or if businesses stop growing, or if people run out of money to invest into stocks, or if we see another lockdown, these things could cause a correction or a full-out crash. But one thing that we learned from 2020 is that you cannot try to predict what's going to happen in the future. Right now, we have more stimulus measures probably coming, and we have the Fed still promising to print an unlimited amount of money to keep the markets inflated. But this has to be done with harmony with everything else going on in the economy and the world, because if the Fed and the government print too much money and people start losing faith in the dollar, that could create its own issues too. Fortunately for the United States dollar is known as the world's currency, and the United States is the world's superpower, so that's not very likely to happen, but it's still a possibility. One thing that's a little bit more likely is the Fed could say that they're going to stop printing money and pumping it into the markets. Now, the current administration of the Fed might not do that, but let's say we have a new president come November, and this new president appoints a new chairman of the Fed, and this new chairman of the Fed doesn't want to keep pumping up the markets, then that could cause a stock market correction. Again, this is possible, but it's impossible to predict. The optimistic side is that all these stimulus measures work, and our economy, not our stock market, but our economy starts booming, and now people have more jobs, and our economy is growing quickly, and now our stock market, remember, it was growing like this, now our economy catches up. This would be very good news for the stock market, because now the economy is growing just like the stock market. There's a lot of factors at play here. You have the Fed pumping money into the markets, you have free money floating around, you have stimulus plans, you have cheap debt, you have a presidential election coming, so you do not want to base your investment decisions based off of just one macroeconomic factor. Find companies and ETFs that you believe in and that you think are priced fairly, and just keep buying them like normal. If you plan on retiring in the next few years and you need some of this money in your investments to survive, then take some money off the table while you're ahead. Yeah, you might miss out on some growth, but we really don't know what's going to happen over the next few years, so is it worth that risk? At the end of the day, the people that make the most money in the stock market are the people that invest for the long term and that don't get distracted by the day-to-day swings and the emotions, because over the long run, the stock market has historically always gone up. And the people who end up losing the most money are the emotional investors who buy when things are going up, and as soon as things start to fall, they panic sell. Look, even if you bought into the stock market during the peak before the 2008 crash, you would have still come out a winner over the long term if you just held on to your stocks. We can see that the stock market is overvalued, but it is impossible to time the market because we don't know what's going to happen in the economy, and we don't know what's going to happen with all the other factors in the stock market. That's why you want to come up with your own investment strategy and stick with it. And one thing that can help you is staying up to date on what's happening in the finance and business world. And I know that's not very easy to do, especially with all the new stories being published every single day, but that's why we created the free Minority Mindset newsletter, where our team first breaks down the top finance and business news, and then we show you how this news affects your wallet. That way you can be smart with your money. This newsletter is completely free, and you can subscribe to our free finance and business newsletter by clicking the link up here or by clicking the link in the description below. By the way, this financial newsletter is completely different from our financial education emails. Thank you for watching. If you enjoyed this video, share it with one friend, that way we can help spread the word. If you want to learn more about how you can find a strong company to invest in on the stock market, I already made a video on this, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.